We are joined right now by Tim Ord. This is every Tuesday and Thursday. Of course, he could not join us on Tuesday, but that is all right. It's good to have him back on. This is Tim Ord of the Ord Oracle. If you want to check out Tim, you can go to ord-oracle.com. Additionally, you can go over to TFNN.com, and when your computer loads, you will find on the Services tab 2 fantastic webinars from Tim Ord, The Secret Science of Market Tops and the 6 Secret Ratios that every trader should know. We've had a few people purchase those recently. Fantastic. They've been communicating with me on it, and they really enjoyed it. Tim, it's good to have you back. How are you doing?
Good. So let's jump in the market, see what's going on.
I think so. Give me 1 second to pull everything up here. All right. I got chart 1 up now.
All right. This is kind of a short-term chart. This chart, I think, was triggered on November 15th, so that's, 3 weeks ago. Let's see, I think the low was, November 15th and reached a high 10 days later on November 25th. Anyhow, I guess you got to define what the chart is. Anyhow, the bottom window is the NYSE advancing issues over declining issues with a 3-day average. And what to really get bottoms of the market, you have to have kind of a sign of weakness or a kind of a capitulation or a panic low. Then right after that, you got to have a sign of strength. If you don't get that combination, then it's not a bottom. What will happen if you don't get the sign of strength right after a selling climax per se, you'll have another selling climax until finally you do get a sign of strength, and that's when the bottom occurs. So there's a lot of different indicators to define bottom. There's advanced decline type indicators where you have an exhaustion to the downside and a sign of strength afterwards. You have a volume type exhaustion move to the downside and a sign of strength afterwards. There's McCollum Oscillator type capitulation to the downside and a sign of strength to the upside. Then there's a summation index, McCollum summation index, which is a longer term type indicator. But the one we're going to look at today, and actually there's this WAG breast thrust indicator, does something similar to the one I'm going to show you right now. But I'll get back to the bottom window. You have to have a sign of or a capitulation to the downside. That happens when the advanced decline 3-day average hits below 0.7. And that happened on November 15th. We had a 0.68 reading. Then within 10 days or less, preferably, you have to have a sign of strength, and that's a reading above 3 on this indicator by November 25th. Well, it happened to hit 3.28 on November 25th. So you actually have a capitulation and a sign of strength. And these type of things only happen in uptrends. They don't happen in downtrends. Downtrends, you get a capitulation to the downside, no sign of strength, more capitulation to the downside. So it's important to see that sign of strength right after a low. We had that November 25th. And so I shaded in let me pull this other thing up here. I shaded in light tan or pink there the times when you had a sign of weakness to a sign of strength. And if you notice, those are all coming out short-term lows. So we just had that. So this is not a top of any consequence. You can have some mild consolidations, but not big declines in the market, not usually anyhow. There's one failure back in 2003, looks like about August. The market did have a sign of strength and it kept going down. But in general, this indicator works about 90%, they're at 85% of the time. So it's something to really pay attention to. So I think next week is probably going to be a sideways down week, and I'll show you that, the reason why. But when this indicator flips to a bullish signal, usually at least they're multi-weeks, if not even sometimes multi-months. So we're beginning a new up phase here that will last at least into January, maybe February, March, don't know how long, but the uptrend's intact. So that's good. So let's flip to chart 2.
Okay.
So we're bullish along the S&Ps in chart 2. This is a weekly indicator, and this is an indicator goes back, looks like a couple of years, lower a couple of years. And I got shaded in green. Now the bottom window is the VIX. Next window up is the SPX-VIX ratio. And the next window above that is the weekly SPX. So this is a weekly indicator. And what I'm trying to show here is that the green shaded areas are times when the S&P's made a lower high and the SPX-VIX ratio made a higher high. That's a bullish divergence suggesting the rally is not a double top, but the market's going to keep going higher. And this happened back in early 2023, again in late 2023, looked like about April, May of 2024 of this year, made kind of a double top. Ratio made higher high, suggests the market's going to go higher. Then August and September of this year, the SPs made higher highs, and the ratio made lower highs, and I noted that in pink. Now, it turns out that was a false signal. Actually, I did get out, and I got back in, but the market since then has made higher highs along with the SPX-VIX ratio making higher highs. So we're back, even though it did give a signal and it's actually a false signal, we're back on the bullish bandwagon, I guess you might say now.
Okay.
And even on the recent high, we made a higher high in the SPX ratio. So on a weekly time frame, so this is a chunk of time, so there's no sign of a top of any consequence coming anytime soon over the next several weeks. I'll put it that way.
Yeah, Tim, stay right there. Folks, we'll be right back with Tim Ord after this break. Welcome back, everyone. This is Jacob Schub. I'm joined right now by Tim Ord of the Ord Oracle. If you go over to TFNN.com right now, you can go over to the Services tab. We have 2 fantastic webinars from Tim Ord. Strongly recommend checking those out. If you decide to do so, once you pay, please send me an email at jacob@tfnn.com. I will give you access to those. Additionally, you can go to ord-oracle.com and check out Tim's newsletter as well. Tim, before we went to the break, we were kind of looking at chart 2 with the SPX still kind of bullish overall.
Right. So we got the dailies flipped to a bicycle on that advanced decline 3-day average thing, suggesting an impulse wave has started. This indicator on 2, which is the SPX-VIX ratio, there's bullish divergence. S&P making a higher high. That ratio is making a higher high. That's the definition of an uptrend. So it's narrowed down to a smaller time frame. Let's go to chart 3. And this chart's nothing real serious here, but the top window is the SPX, a little bit messy, I know. The bottom window is the VIX. But on the top window there, I have a Bollinger Band on it, and I had blue circles around the times when the SPX, or this is the SPY gets above the Bollinger Band. A lot of times that puts it in a consolidation. Sometimes just flip sideways, sometimes there's decent pullback. But anyhow, we're up against that Bollinger Band now. I have a kind of a light blue circle area up there. You can see what's going on. We're kind of running in that Bollinger Band. It's kind of a resistance area. And also have the previous high, a dotted blue line across, comes in around 600 on the SPY, and that's just the previous high, and that should be a support area. So downside's not much, but seasonality for next week's actually at best sideways and probably down a little bit. So 600, we may pull back down to 600, don't know. We're starting to see little panics in the ticks and trend. I got it marked in red there. Over the last couple of weeks, the trend and ticks are starting to reach bullish levels, and that's really good in an uptrend. The market going up, and you actually get panic in the ticks and trend while it's going up, suggests this is probably there could be a mild consolidation, but that's really bullish to see panic in an uptrend. That usually implies that eventually this uptrend will continue. But I think when there's a good chance we could possibly pull back to 600. And yesterday was a decent day up. Volume expanded. If you look down at the bottom window, which is the VIX, yesterday the VIX was up along with the S&Ps, and that's on a very short-term basis. That's kind of a minor warning that the market's probably going to start to consolidate. So I think that's probably what's going to happen. I think in general we're going to pull back to around 600, find support. and from there start going higher again.
Okay.
So nothing real serious. Today is we're down today still. We're up 4 days in a row going to yesterday. If yet today was up, we'd be up 5 days in a row. That would be bullish. But we got the holidays around us. Volume's probably going to drop off a little bit. Mild consolidation 600. Bigger trend still up. Monthly or the weekly charts remain bullish. Everything's fine. It's just kind of probably going into a doldrum probably next week. So a little bit of patience. Nothing significant that I can see that this is nothing of a worthwhile top for me, even though the market's up, I think, 26% this year. It was up 20-some% last year. So far, so good. I think this year could still be 20% up. So that may change, but that's what it looks like so far. So
absurdly strong market these past 2 years for sure.
Yeah, and everybody. Trouble is, that Trump's coming in, and he's, when everybody agrees that the market's going to be really good, and then Trump's kind of putting that euphoria forward.
Yes.
And that's kind of a sign to worry, actually. So, but that worry hasn't showed up in the market yet. I'm not seeing anything detrimental on the intermediate term scale yet. Sure. So, but I'm watching real carefully here, extra careful. So, but right now, so far, it looks fairly good sailing on the S&Ps, at least going into first of next year. So let's take a look at the gold market.
Yeah, let's do that. Yeah, I think you have gold trading off, at least the contract trading off right now about a full percent at 2,651. Let's take a look what you got looking.
All right, GDX, actually the top window is the RSI for the next window down, which is inflation-deflation ratio. And it made a triple bottom. We're extremely low on the inflation-deflation ratio. And normally when this ratio crashes, now it really goes through the floor, that's when the RSI gets below 30. It's usually a good time for an intermediate term low. And all those red dotted lines across the graph here, and this chart goes back 2.5 years, whatever. It marks at least intermediate term lows. And we had one here mid-November, November 15th. We had 29.69 on the RSI. That day marked a low. And we kind of pumped up here. And it's actually inflation-deflation ratio is down around 0.14 right now, which is pretty much matching the low. So downside on GDX is extremely unlikely to go down, I'll put it that way. So we're at another low, even though the market has popped up a couple 3 points. It's kind of going sideways here. GDX and XAU both are. It does appear an intermediate term low is forming here. I got another indicator, chart 5. This is a little bit shorter term indicator that works just as well. Sometimes this indicator shows divergence, but anyhow, the red lines are times, red dotted lines are times. The top window is GDX, next window down is up-down volume, cumulative up-down volume for GDX. Next window lower is the cumulative advanced decline for GDX. Bottom window is GDX GLE ratio. When 3 of the 4 indexes hit the lower Bollinger Band, you're at a low. Well, back in November 15th, all 4 of those GDX, up-down volume, advanced decline, and GDX GLD ratio hit below the Bollinger Band. And so that's another short-term indicator. Works pretty good at tops, too. Okay. But we got 2 types of different indicators here giving buy signals. So we're at a low here. I don't see any danger to the downside. We already had kind of a panic type situation going into that November 15th low. So it's a mild consolidation. Declines over. I think it's probably in general, intermediate term wise, this is a good buying opportunity. Okay. So this market has further to go to the upside. Well, Tim, want to hear the music?
Yeah, Tim, stay right there. We have one more chart to go over. Folks, we'll be right back with Tim Ord of the Ord Oracle after this break. Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Tim Ord of the Ord Oracle. If you want to check out more from Tim, you can go to the ord-oracle.com. You can check out his newsletter there. We were taking a look at potential, I guess you would say, bottoming signals in the GDX. it'd be a good time to kind of start adding some positions. We're on chart 5, might be moving over to chart 6.
All right, chart 6.
Yeah.
This is another indicator that picks out intermediate term lows. This indicator is probably at least a multi-week, if not a multi-month signals. The bottom window is the 18-day average of the up-down volume. The next window higher is the 18-day average of the up-down volume. So a little bit different twist. It's not a cumulative, but an average. So it shows a little bit different picture. But anyhow, what's important on this, again, you got to have capitulation. And this chart shows capitulation. Top window is GDX. But anyhow, capitulation happens when the up-down volume indicator and advanced decline indicator both hit below minus 40. On November 15th, we hit advanced decline hit minus 43.46, and on November 15th again, the up-down volume hit minus 48.45, 48.45. So that pretty much marked the low, and what normally happens right after this, you can't quite tell on this chart, but normally there's a sign of strength, and I think we're in the midst of that sign of strength right now. Sometimes it takes several weeks to get going, but every time it hits that capitulation, you usually bounce off that low pretty strong. I think we're in the midst, even though it hasn't gone far yet. I don't think the market is capable of going down. I guess worst case scenario, it could test the recent low, which I think is a couple points lower than where we are right now. But right. I think the energy to the upside on GDX is going to expand. I think the pattern that's forming on GDX, which is the top window, the head is a 2022 low, right shoulder is late 2023, early 2024. We're going to take a shot at that neckline, which is up around 43, give or take. And will we bust through it next time around? Actually, I do think we will. This head and shoulder pattern has an upside target around 60, 65. So I think, which is ironically is also the 2012 high, I think it was. So that is the resistance area up there, but I'm thinking we're going to head back to the old highs. What happens from there, I don't know. But that's what it looks like is going to happen. I got some other signals that generated buy signals back in May, and minimum time frame for those signals was a year and a half. That implies this market's going to rally into November of 2025. Mm-hmm. So I think next year sometime we'll reach that 60-65 range on GDX, and from there we'll have to reevaluate. But this market's still in the early stages. I think we got at least a year to go here before a meaningful top. And it could be 2-3 years. There's some cycles that I've done that this current rally could go all the way into 2027. So we'll have to wait and see. But at least we got another 12 months at a minimum for GDX to rally. And a lot of these little stocks that are down in the penny stocks will probably turn into $1, $5, $10. Probably sure. Some of them turn into $10, but we'll have to wait and see. But it's a good time if you're looking at the bigger picture. This is a decent low to buy on. This is probably the last time you'll be able to do it, in my opinion. It's going to be a while. I don't think there's going to be any cheaper times going forward than right now, because I think next time we're up, we'll break that neckline at 43, head to the upside target. So looks good.
Yeah, fantastic. And I can see too, like obviously the gold contract has gone up so much, you're not seeing the big pull with the miners just yet. I think in this interim we've experienced, there's been, how could I say, like different industries, like you have nascent AI kind of investing that was going on and everything. Once that all settles out and then the people start seeing the opportunities, and this is more of a fundamental look at it, but I could also see, those miners start reflecting an equal increase, that you saw in the gold contract. Yeah. So
Yeah, it's going to be, I think, a fun year. And also, I looked at the materials sector.
Yes.
And it's actually showing a really bullish kind of a setup. So materials, obviously gold and silver are materials.
Right.
So the whole, I don't know what that means, a big boom in building is going to go on. I don't know.
No, well, it makes
all
sense.
The materials are starting to show some rise here too.
Definitely. I mean, to that point, one, if when you come back on Tuesday, if you want to bring materials chart, that'd be awesome. But your hunch is, I think, correct as well. I think there's going to be a lot of say industrialization. It obviously won't be like how it was last century or something like that. But production of more high-tech stuff is going to start happening within the States, and that's probably contributing to movement up in that. Well, Tim, thank you so much for coming on. It was great having you.
All right. Well, thank you.
Yeah, I'll see you Tuesday.
We'll talk
okay,
to you
Tim?
next Tuesday.
Yes, sir.